Basani, thanks so much for your time. Yes. I mean, I see profit for the year up 70% from the same time, the same period ago. What was the driver?
So the key drivers have been the fact that we've been able to release provisions from our impairments based on the fact that the book, our lending book, has been maturing since we're coming out of curatorship, and also given the fact that we've been able to lend to lower risk customers, which means that we have to hold lower impairments. You'll see that also comes out in our lower credit loss ratio, which has dropped from 12.7% to 11.7%, so we're really proud of that as well. In addition to that, what we've seen in the last few months, in fact, is that our sales have increased by 21%. And that's an incredible achievement for us, because since coming out of curatorship, getting our sales to increase and getting our balance sheet to grow, in fact, has been the challenge for African Bank. And our balance sheet has now grown, or our lending book has now grown by 4%, which really shows an organization that is starting to turn the corner, that is becoming a strong competitor in the market, and where the transition from curatorship into becoming a strong competitor is coming out in all the different metrics that you mentioned earlier.
All right, so then would you say that you're at that point now where you are turning the corner, because you also go into detail about how the operating environment in which you guys were in was pretty difficult.
Absolutely.
So what would my question to you is, are you at that turning point, and what would you say was the biggest headache in the year that was?
We definitely would have liked the economy to have grown a little bit more, to give us a bit of a tailwind. But I think for us, given the fact that we are growing off a relatively small base compared to the other banks, our challenges have not been about the macro environment. They've been much more about ensuring that our operations work better, making sure that our teams are well equipped to be able to sell in a different environment, particularly given the fact that we've constrained our credit risk appetite since coming out of curatorship. It's been about helping our consultants to start selling multiple products instead of one product. So you would have seen that our sales and deposits have increased by over 200% to 1.1 billion rand in the year under review. And you can imagine that's an incredible achievement for us, because before going into curatorship, the bank didn't focus much at all on retail deposits. So for us to be able to grow our retail deposit book to this extent over the last 2.5 years really speaks to an organization that is starting to appeal to a broader sector, a broader cross-section of South African society, a bank that is growing in maturity, and a bank that is better able to take on a competitive environment in a bigger way in the years ahead.
Basani, talk to me about is it the drop in cash deposits here from 10.1 million previously to 8.2. I mean, is this a measure that you guys look at closely, and is this a concern for you?
Not at all. So the drop in our cash is predominantly due to the fact that we've been doing a buyback of our liabilities. So you may recall that African Bank has been funded largely by wholesale funders, and the funding that is currently in the bank is at a reasonably high cost of funding, sitting at about 10.1%. So that's in comparison to about 6% that other banks would have as their cost of funding. So what we've needed to do is to start, I suppose, there's right-sizing the balance sheet to make sure that we are able to lower our cost of funding, and also ensure that we don't have too much cash on the balance sheet. So one of the challenges that we had, which is also a wonderful gift, is that when the bank was recapitalized as it came out of curatorship, it was recapitalized with 10 billion rand of cash. So we've been able to utilize that cash, which really was the equity in the organization at the time, to buy back some of our liabilities. So that's why you're seeing the drop in cash.
All right.
But you'd also have noticed that the organization is actually very cash generative as well. So we generate about 200. We generate about 2 billion rand, of operating cash a year. So we've generated about 4.3 billion rand of cash over the last 2 years.
I mean, I don't know how you keep all those numbers in your head. But okay, Basani, it looks like the banking space is quite an attractive space here in South Africa, because everybody wants in. You are looking to go back to transactional banking, but right now the competition is a lot more intense than perhaps previously. So how are you going to get me into your branch as opposed into Time Bank or to Bank Zero or into the other Discovery's new bank?
What's wonderful about where we are right now is that it actually creates a lot of opportunities for customers to choose the value proposition that works for them. And so the value proposition that we've chosen for ourselves is one where we definitely will have the lowest fees in banking. So just based on our benchmarking of the fees that are currently being offered by players that are currently in the market. We definitely will have the lowest banking fees. We're going to have a value proposition that talks about shared banking. So we've created a proposition that allows people to bank in groups. So we know that people like to save together. If you think of a stokvel type of scenario, people like to save together for a trip, for example, or families want to be able to manage their budget together and want to be able to have access to the same account. So we've created this, and we think it's a first in South Africa, and I think that will be very, very attractive to a market where people are definitely wanting to share stuff, and it's a shared banking model. In addition to that, we've also created a model in terms of which customers can engage with us on any device, on any platform that they wish to, and they can revolve around that, right? So if you want to start an application on your cell phone, then go into your iPad, and then go into a branch, you will be able to pick up exactly where you left off, as opposed to having to resubmit documents again or restart the application. So I think that's a very, very good value proposition, because it means we save our customers time, and we save them money, and we give them the best investment rates, which means we help them to grow their money faster. So those are really the components of our value proposition, and to the extent that that resonates with you, we definitely would want to have you as a customer. And I think that's the value to customers of having multiple competitors in the market.
All right. It will be interesting to see how it all turns out, given that I must say most of the new CEOs in this banking space all promise lower transactional fees. So it will be interesting to see how the man on the ground reacts to that. Final question. So your shareholders are happy at the fact that you are more prudent when it comes to risk lending. But I mean, for all its wrongs, VBS did supply quite an important area in the market that didn't get access to lending from traditional banks because they're deemed too risky, but at the same time these sort of smaller businesses are instrumental to the kind of growth that we need as a South African economy. Getting into that VBS space, their clientele, is this something that you'd be looking into?
So I must say, I can't pretend to have understood the business model of VBS particularly well, but I think a couple of things. One is they were very localized in the vendor market itself, whereas African Bank is definitely a national bank. So we have 392 branches across the country, and so we service a broad spectrum of South African society. We have over 1 million customers, which also speaks to that same idea about appealing to a broad cross-section of people in the country. Also, we don't do business lending at the moment. We only do retail lending, so to individuals as opposed to funding businesses. And we will always be a responsible lender to that market, because we understand that the need exists. But also, we are, given our history, and given the importance for us to comply with regulations, etc., and to return a good return to our shareholders, it is important that we lend within the risk appetite that has been signed off by our board, and that risk appetite is limited, right? It's a very constrained risk appetite, and we think it's the right place for us to play. So we definitely, to the extent that customers don't fall within what we deem to be the kind of customers that we can lend to from a risk perspective, we definitely would not look at lending into that market.
All right, Basani, thanks so much for your time. We will leave it there. That was the CEO of African Bank, Basani Maluleke.